Hello there, welcome back viewers, once again. Right, I just wanted to just state something else before you trade. There's three things to take into account before you trade. First of all is have a good fresh mind, yeah? Make sure your brain is not cognitively impaired. For example, that if you're suffering from anxiety or depression, for example, or you have schizophrenia, or you're homophobia, for example, and or you have shivers and you're worried most of the time, or you're falling into severe depression, make sure you're on medication, and make sure that once you're taking medication, don't start trading straight away. Make sure the medication takes its place where it belongs. When it kicks in first, and then you start to trade. So my main purpose is just to suggest that make sure you have a fresh mind, fresh brain, and make sure that you're not suffering from any anxiety or depression, because you do need to be very focused whilst you're trading, okay, when you're in a live trading market. So the brain needs to be really focused. So that's one point I want to highlight. The second one is make sure when you come into the live markets you have ample knowledge, okay. So read some books, do some research, practice in the demo account, okay. Get some knowledge, speak to other people who are dealing with the same trade. And thirdly, I would like to emphasize, make sure you have some experience. So trade with someone for a while, yeah, like 1-2 years, because obviously you will start off as a beginner trader, and then you become novice at it, and then obviously further on at the latter stage you become professional. Okay, so make sure you have some experience. So before I go into more detail now afterwards, I just wanted to focus on these 3 points. So make sure you're not cognitively impaired, have good knowledge and experience. So these 3 things you need to take into account before you get yourself involved into live trading. Okay, right, let's move on. Now let's go back to token block strategy again. Now let's say we have a block here, and let's say the market is trending down, and you have a block here, okay. You've entered the price somewhere along here, say let's go 47.68, doing oil for example, okay. Take one of the underlying assets. You have a stop loss here, okay. Now, if this block is moving down, that's fine, you're making profit, okay? So what about if it's not moving down, it moves in the opposite direction, and you're not making profit? Let's have a look at that part. Let's have a look at the losing part, okay? And a successful trader is a person who's willing to lose in the market, okay? So you've got an entry point here, okay, and you've got a stop loss here, okay, that's your stop loss domain. Right. Now I'm going to split this token block into 4 parts, okay, so this is 20 pips. The market for some reason is bounces back, so it's going this way for example, okay. Split into 4 parts, okay, so that's 5 pips, 5 pips, 5 pips and 5 pips, that's 4 parts, okay. Now let's label these parts. So this part will be the green zone, okay. The reason I call it the green zone, because if the price breaks here, say at 47.68 barrel, I'm in good position, I'm making profit. So that's my green zone. And this one, I call it the safe zone. And this one is the red zone. Okay, so I've split the token into 4 panels, yeah, 4 parts. Now in the safe zone, if the price bounces off and it goes here in the safe zone, I need to be a little cautious here because the price has moved up in the opposite direction. It's gone to say 47.51 for example. Okay. Now I'm in a safe zone, so I'm going to be waiting in this area until the price goes back down in a favourable position where I can make some profit. Okay. But what about if the price goes really up and it comes into the red zone? Okay. That's where I'm in trouble. Okay. That's where I need to put my thinking cap on. That is the point, the red zone, where I need my mind to be very fresh and I need to be very, very active. The red zone is the most difficult part to deal with. Okay. Now let's analyze the red zone. Okay, so this is 5 pips and this is your red zone. Okay, and as I stated, your mind needs to be really fresh, so make sure you're not cognitively impaired. Yeah, so in the red zone, this is my last part. Okay, now if the price goes in the opposite direction and the price breaks somewhere here, I need to apply martingale strategy, yeah, in order to cover my loss, as I stated in the earlier videos. Yeah, at this point, if the price breaks, and this is where you apply your second commission 2 to the broker, because the first commission you paid here for the sell, yeah, to the broker. Your broker could be plus 500 or FX Pro, yeah, or Easy Forex or Baby Pips Forex company, whatever. Okay, there's quite a few Forex brokers out there. Now here, the price breaks, but before entering the second commission, this one, second commission here, which is the martingale, so you're doubling your lot size, say 200 barrels, and you put 100 barrels here. Yeah. Be very careful first, keep your thinking cap on, look at the indicators, look at the Bollinger Bands as well. Yeah. If you see the Bollinger Band, it's not really opened as wide as it should be, say it's going towards a consolidation, something like that. Yeah. Don't enter the second commission straight away. Have a look at the pips because it might be fluctuating up and down. So allow around about 2 to 3 pips, okay, before you enter the second commission. Okay, so if this is priced, if the signal has reached the moving average signal has reached the red zone, and this is at 47.43 for example, so it's gone up, and here this was 47.68, yeah, so it's gone roughly about near enough less than 20 pips up, for example. Yeah, within 20 pips, yeah. Okay, let's make it within 20 pips. 6, so make it 6.2 for example, yeah. So don't enter the second trade, which is the martingale strategy. Don't apply the strategy straight away. Wait for the signal to fluctuate 2-3 pips. Yeah, 2-3 pips. When it really breaks, and keep your eyes on the Bollinger Band. So if the Bollinger Band is splitting really high here, and the price really breaks extremely high, then you can enter the martingale strategy. But if you see the Bollinger Band volatility strength is low, yeah, or you see, according to experience, the market is going towards consolidation or it's narrowing down, so it might be a consolidation taking place between the market maker. Don't enter the second trade, wait for it, because the market momentum might be quiet in this area, might be just kind of faking it out, 2-3 pips. So don't enter this trade straight away, wait for it. When it really breaks, then enter the martingale strategy. That's what I wanted to make you aware of, okay? Don't go chasing after the market, okay? Because if you don't apply the martingale strategy, say if you're shorting funds or wherever and you want to continue trading, then that zone, this area here, becomes a gamble, okay? So then you're gambling if you're not applying any strategies, okay? Gambling. So that's, in Islamic terminology, you could say it's a haram zone, yeah? Haram zone. So this becomes haram or gambling, okay, which is obviously if you're a Muslim trader and you're trading with a high latency platform, okay, I would strongly recommend high latency. High latency is because it's more like compatible with the human mind, okay. High latency means the signal reaching to the monitor, there's a delay in the signal, so it's a longer delay, okay. So longer delay, slow signal, it'll be much better for the mind, for the human mind, yeah, if you're new to trading, okay. Now if you don't apply a strategy here, for example martingale, if you don't double the barrel size, double the lot size, then and you decide to continue trading, then that's gambling, okay. And if for example it bounces back and bounces back down and you make a profit, for example the market becomes extremely volatile and then it decides to bounce back and you make a profit, and you made a profit here, okay, you're out of discipline track, right? And say you've won the trade, for example, so if you've won the trade, right, it's known as winning the trade, but it's a bad trade, okay. It's not a good trade, it's a bad trade. Hope you've understood that. Say for example you follow it, you didn't apply the strategy, you went into the haram zone or you gambled with the money, and then the market decided to come back down, big breakdown, you made profit, you won the trade, but it wasn't done professionally. It has to be done professionally, okay. You have to trade professionally in the market. So that becomes a bad trade. Although you've won the trade, you've made profit, but it's a bad trade. It's classed as bad trade, okay. If you apply a martingale strategy here, first of all you come out from the haram zone because or gambling, you're not gambling, you're trading. You've applied the double lot size, and then if the market bounces back, okay, you let go of the martingale strategy, you release that second commission trade, and you let it flow down, then that becomes a good trade, okay. That becomes a good trade, alright. So if you apply the strategies, if you follow the discipline, if you do it professionally, then it's a good trade. Even if you lose money, if you do it that way, if you lose money, it's still a good trade, okay. Because you've lost the money using 10% risk management, okay, in a professional way, without gambling and without being in the haram zone, yeah. So that becomes haram if you don't apply the martingale strategy in order to recover your loss, okay, because then you're just following the market and then you will become lost and you don't know where the market is going, down or up. I hope this information is useful. Please keep on watching. Thank you very much.